Welcome to the 27th installment in Trading Strategy Guide's Trading Education series. Today, we're starting a new module, the Methodology module. And today's topic is my favorite, technical analysis. Hang around with me for a few minutes. We'll talk about it. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education series. Today we're going to talk generally about technical analysis, mainly about what is it. In the next few weeks, we'll go into more detail about it. And be sure you stay to the end of the video and I'll show you the dream trade for this week. Here we go. If you're new to the financial markets, the concept of technical analysis can be very intimidating. It doesn't have to be. All we're doing is looking at charts to see what they've been doing and using that information to anticipate what they will most likely do in the near future. It doesn't really matter what market you want to analyze, be it Apple stock, DAX futures, bonds, currency exchange rates like Euro USD. Technical analysis can help you understand the price movements of these markets, and it can help you interpret those chart patterns. Generally speaking, technical analysis is the investigation of markets based on price action only. You may be more familiar with fundamental analysis that looks at the economic fundamentals of the underlying security. A practitioner of technical analysis is simply called either a technician or a technical analyst. And all technical analysts believe that all information that is relevant to forecasting the movement of a security is already priced into the chart. So by analyzing price action in the recent past, and even in the more distant past, we believe that you can apply that knowledge to identify future trading opportunities. I know, I'm not going to bore you with too much history, okay? But I'm going to give you just a little bit to give you an understanding of some of the things behind technical analysis. Technical analysis originated in Japan back in the 18th century with the development of the candlestick charts. A Japanese rice trader, whose name I'm not even going to attempt to pronounce, developed an unorthodox way to forecast rice prices, namely the candlestick charts, which later was introduced to the Western world by Steve Nissen. The birth of technical analysis was during a samurai-based culture, which influenced a lot of the terminology in these technical analysis candlesticks, which are related to war, and trading was viewed as a battlefield. The advent of modern technologies such as online trading has brought a variety of chart types, most popularly the bar chart, the candlestick chart, and the line chart. Since chart movement is primarily based on human emotion, it still works consistently even today because human emotion just doesn't change that much through time. Knowing the overall market trends is essential for successful trading, and technical analysis is a great tool that can help you determine not just the direction of the market, but it can be used for timing your entry and exit points as well. If you have enough practice, you can look at a chart and in 10 seconds or less, you can know if the chart is in an uptrend or a downtrend. So how do we distinguish the prevailing direction of a stock, commodity, or currency pair? As long as the market is progressing with higher lows, followed by higher highs, this is the definition of an uptrend. So for example, from this point to this point, you've got a higher low. From this point to this point, you've got a higher high. That represents an uptrend. From this point to this point, you've got a lower low. From this point to this point, you've got a lower high. So that's a downtrend. Just keep in mind that an uptrend is higher highs and higher lows. A downtrend is lower highs and lower lows. Always remember, however, that a market can be in an uptrend on one time frame and a downtrend on another. So don't be fooled into thinking you're right and someone else is wrong, or vice versa, because they picked a different direction than you did. They may be looking at a different time frame. So, what does technical analysis attempt to accomplish? Well, the first thing it attempts to accomplish is timing the markets. Technical analysis is a great tool for market timing. If you're an astute trader with a lot of experience, technical analysis can help you achieve a high degree of accuracy with your entry and exit points. The second item would be reading the market sentiment. Technical analysis provides you with a great advantage of being able to determine the balance between buyers and sellers, which is known as the market sentiment. The size and the color of the price candlesticks can give you a fair idea of the balance between buyers and sellers. For example, when the body of a candlestick is bearish but small, there is a relative equilibrium between the bulls and the bears, or the buyers and the sellers. The bigger the body of the candle, the more bearish or bullish pressure exists in the market. Item number 3, spotting overbought or oversold conditions. Another benefit of technical analysis is the ability to spot overbought or oversold readings in the market. The most popular technical indicators used to spot possible exhaustion points within a trend are the RSI and the stochastic indicators. If you're looking for a reversal point within a bullish trend, an overbought RSI reading can be an early sign that the market is about to reverse. The opposite is true, of course, for a bearish trend. And item number 4, the discovery of price patterns. Technical analysis also gives you the ability to discover repeatable and tradable price patterns. There are many textbook patterns like the classical head and shoulders pattern, harmonic patterns, Elliott wave patterns, pin bars, and so on. However, the beauty of technical analysis is that it gives you the potential to discover new profitable price patterns if you put in the necessary time and effort. If you follow my Trade Picks videos, you'll see me doing this every time. I have certain patterns that statistically do the same thing each time and use that edge to find trades in the market. Obviously, there are many more price patterns than I use in my videos. Some you may like even better than the ones I use. We'll be looking at all of this in future videos. So why does technical analysis even work? Well, technical analysis works because a price chart is simply plotting human emotions and psychology in pictorial form. People react to price movement, and that reaction is pretty much engraved in stone. Being able to use this information will place you a step ahead of the herd. By looking at a price chart and by giving it a voice, so to speak, each candlestick price pattern tells a story. For example, if you see this long wick price pattern right here at the top of an uptrend with high volume, we know this means that there's a lot of profit taking. So you had a lot of buyers going into this up move right here, and they decided, hey, I got enough money on this move, I'm going to sell my stocks, and that's going to drive price down. And we can anticipate that the bears are going to start showing up here, and we're going to see a healthy consolidation at the very least after a strong move to the upside like this, if not a complete reversal like we see right here. The volume in the wicks is really a nice indication that can tell us exactly what's going on. Now, the location of the price pattern relative to the overall trend can also tell us a completely different story. Let's take, for example, the doji candlestick pattern, which is an indecision pattern, suggesting that neither bulls nor the bears are in control. Now, if that doji candlestick pattern develops at the top of an uptrend, then it's a bearish reversal candlestick because it shows indecision and the fact that the bulls are running out of fuel. If the same doji candlestick pattern occurs at the bottom of a downtrend, then of course it's a bullish reversal pattern. Technical analysis alone will not make you a profitable trader, but your success can increase if you really understand how the market works and how to correctly apply these technical tools. Ultimately, your success will also depend on applying good risk management rules and at the same time being able to control your emotions. Well, that's all I've got on technical analysis for today. Let's take a look at the Dreamtrades. Dreamtrades is a service from Trading Strategy Guides. I've been testing this out for a few weeks and getting some really nice stock trades. Just a quick overview, Dreamtrades shows you selected stock issues that meet the Dreamtrades criteria. The stocks are selected by their trade volume and other fundamentals, and also by the price with respect to the 50-day, 150-day, and 200-day simple moving averages. This is the Running with the Bulls page right here for the potential buy trades. And the first dream trade we're following is Arcosa Inc. or ACA. It hit our first target on Monday. I moved the stop loss up to break even on this. And I took my entry price, multiplied it by 1.1 to get my second target. When price gets up here and hits the second target, we will move the stop loss up here to plus 5%, and so on and so forth. B2 Gold or BTG still kind of hanging out right here at our entry price. It pushed down here nicely and tested the 50. That's always a good sign, especially with this big wick right here, because wicks represent violent price rejection. So that's a pretty good sign that this thing is headed in our direction. Lumentum Holdings or LITE triggered this weird buy on Friday. I talked about it in Monday's video. Still doing some wacky things right here, but it has moved more than halfway to our first target, so that's a good thing. I did want to mention too, I mentioned this in Monday's video. After a discussion with Casey, I realized that I had the trade rules wrong. The initial stop should be 10%. So on the buys, take your entry, multiply it by 0.9 to get your initial stop, or 1.1 on the sell signals to get your initial stop, and then as soon as you hit the 5% first target, move the stop up to break even. Everything else should be the same though. As I mentioned before, I'm recording this video on Tuesday afternoon. It's after 4 p.m. New York time, so the market is closed. Looking at all these charts, Camping World Holdings looks good and did not trigger on Tuesday, so it still could trigger tomorrow or later. So let's take a look at that. Okay, this is Camping World Holdings or CWH. We had this nice volume decline right here on this bearish move. So I would say that the buyers want to be in charge on this. We got a little bit of a volume pop right here on this move up. It did not have enough gumption to get through the 50 SMA right here. And that's what we're looking for a buy signal. So look for a close above the 50 SMA. We want to see a little bit more volume than this. I'd like to see at least 50% of the average volume on the breakout day. Taking the dream trades is simple but requires a bit of analysis. Just about 30 minutes before the market closes, or about 3:30 New York time, take a look at the charts for all the calls in the Dreamtrades app and find the ones that have been trending in the correct direction. Also, you want to see a spike in volume on the breaking candle. For a buy, look for a candle close above the 50 SMA. Then your stop loss will be 90% of the entry price, and the first target will be 105% of the entry price. If the price starts going sideways, we'll close it and move on, which will allow us to use that equity on something that's actually moving. When the price hits our first target, we'll move our stop loss up to break even. We will not close any of the trade for profit at that point. We will just follow the stops on it. Each time the stock moves 5% in our direction, we'll move the stop loss up 5%, so it will always be 5% behind the current price. Now, Casey also recommends that you just take profit at plus 20%. Just to clarify, the trade management of these dream trades is different from my normal trade pick strategy. In the trade pick strategy, we take some profit when the price hits our first target, and the result of that is typically a lower drawdown, but also a smaller profit when the trade runs. And that's our dream trade for this week. If you want more information about dream trades, just click the link below in the description box. Be sure to come back next Wednesday at 3 p.m. as we continue to discuss technical analysis. Don't miss my Trading Picks videos on Mondays right here at Trading Strategy Guides YouTube channel at 3 p.m. U.S. Eastern Time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great Wednesday, and I'll see you with a new trading pick this Friday.